west side on the
Oh man, we back after a banger on today, man. How y'all feeling after today's session? AM session, we killed it this morning. There was nothing that held us back from being able to take the right trade. We're gonna go over that, preview that. But what we have for you all that's set up on today is we have our new level macro intel of the market in its entirety, right? We're gonna assess that same along with crypto, with our individual equities and our indices. And why is it geared towards the dollar, right? So we're gonna be doing all of that today. All right, so let's get started, man. Let's go ahead and get started. First and foremost, man, thank you all for giving me the time and being here with me on today. I want to share this with you all, and we talk about this for a little bit because with this only makes sense, right? Like being able to have a full understanding of the market. I know today is Monday. Uh, it would have been cool to give this out on a Sunday. We may turn this into a Sunday to be able to give ourselves a preview prior to the day starting. But I like for AM session to have already taken place because it kind of give us an idea as to where we would be headed within the market, right? So let's do this. We want to take a look at the charts itself first and foremost. Let's go to the charts because our plan is to preview first our last trade. This is the trade of what we took on today. And we're going to go to the charts to be able to show you that. Here we go. So here's today's trade. And it was everything of what we called for and what we wanted. Us coming back, trading down back to equilibrium. And the whole entire plan was my first initial bias did not come in the first thing this morning. First thing this morning, my first initial bias was to do what? I wanted longs. So if you were tuning into the lives and you could see based upon my execution marks, I thought we was going to break for loans here, but we ended up having this as in what I would consider a rejection block. This here, I could highlight this a lot better. So here in this area, it was blocked for us, right? So we see price just kept stopping here. And so when it kept stopping here, although we wanted to go long and our loans did not play out and we ended up retracing bad, we got stopped out of the trade. We was like, okay, cool. If we're getting rejected here, that means shorts are getting ready to come in. And when shorts do come in, what is the plan for when we have shorts come in? If I could go take you to a higher time frame and take you to the 15-minute time frame, I just want you to see the importance of your key levels and why they matter to you, why they should matter to you, because you plan your trades solely based upon that. So if you see this blue line, the reason why we wanted loans is because we have relative equal highs here at this long where we're getting rejected from. Equal highs here, right? So if we could go ahead and highlight this, these equal highs as to why I wanted us to go long, because I wanted us to be able to see if we could break through these equal highs that was here. We have equal highs there. We're gonna clone this, bring this here too as well. So I wanted us to see, I wanted to see if we were going to be breaking through this zone, and I wanted us to go long to sweep these equal highs, and then we look for shorts. But the market did completely opposite of that. And what the market did was it went back on a draw of liquidity back to an equilibrium, and we had that already marked out. As you can see, we had our equilibrium marked out of where we would find balance within structure in the market, and we use that as a target for our full TP. That, hey, maybe the market is trying to rebalance itself, get another draw on liquidity, and be able to go up and challenge these relative equal highs of what's resting right above us. That's why we turned this line blue. So if you go back and look at the live, you will be able to see all of this on live. So we end up catching the short. We took profits midway prior to us coming to midnight open. Once we cracked midnight open, we held all the way to relative to the equilibrium of what's here. I'm sorry. And then what you saw was a reversal break back above midnight open, and we could have taken a long position here back to where these relative equal highs, but we did not. That was something that we should have been able to take two trades off of on today, but it's all good, right? It's all good. We're not holding that against ourselves at all, period. We still believe that it was a good trading day. But I want to do an overall assessment on the market itself so that we can be able to have an understanding of where we are within the market. And once we have a better understanding of that, it makes it a whole lot easier from this standpoint for us to be able to decide how we want to engage for the rest of the week. I took on this position based upon what it is of what I felt uh, happened on last night, because I also traded last night, as you can see coming back here. I took a long on last night, short, you know, um, didn't really put too much leverage on it. Took a long, and then I wanted to short it. The short didn't come in, so it was all good. And I just walked away with in profit. And I said, I'm gonna just wait till tomorrow. And as you can see, we just accumulated for the rest of the night, because my entire plan last night was to be able to see if the market was going to be able to take us through Asia back to these relative equal highs here, but it didn't at all. And so I was like, okay, cool. I'm not upset about that. I took my profits and I walked away and said I'll wait to New York session. And so that's what gave me my plan during New York, was us being able to come back to these relative equal highs here. And obviously we did it in the afternoon session more so than it happening in the morning session. In the morning session, we just took a basically a draw on liquidity, caught that liquidity sweep below equilibrium, and took it back to these relative equal highs here. So what I want to do is, while we're here, I put together this newsletter right here for us. So this new level macro intel from the desk of new level traders, and I just want to go over a few things, and we're gonna go and look at these things too as well, right? And some of them are going to pertain towards our macro intel chart. Now this chart is simply just a breakdown of what we were talking about overall. It's just a small breakdown of that. And so in this chart, you're going to be able to see things that's going to give you an idea as to what we're looking at. First thing first, the central anchor, which is the dollar, the DXY. People are not paying attention to the DXY. And that's why they don't trade good. That's why they're not profitable in a sense. And is no not, man. I want everybody to be able to get this and understand this, how this plays a major problem, right? Into how you assess the market overall, things that you should be able to look for overall in the market. One of them is the central anchor, which is the dollar itself. So, what is it about the dollar itself of what it is of what we're going to be looking at here? So, it says to understand the moves across indices, stocks, crypto, and metals right now, we have to look directly at the US dollar index. Following strong macroeconomic data, including a massive non farm payroll beat, the DXY surged out of its previous consolidation and it aggressively claimed the 100 handle and extended its multi week rally upward into a premium array near 101.35 and 101.80. Is everything affected by the DXY? That is the question, right? Is everything affected by the DXY? And that answer is yes. Everything is affected by the DSY. And we're going to take a look at the dollar itself. So let's just go to the dollar while we're sitting here. And so when we go to the dollar, here's that move, the consolidation and the breakout back to what? Equal high where it got rejected. This equal high of where it got rejected solely, here we go. This equal high of where we got rejected solely come from a move of what happened back in 2025, in May of 2025. And we got rejected there, and we got rejected here again in June of 2026. So getting rejected both times here, and we see sellers pulling back here on the dollar. How does that play into our hands, right? How does that play into our hands? What is it about the dollar that we need to know in order to be able to continue to help us? So we ask the question, is everything affected by the dollar? And then the answer is absolutely. The DXY acts as an ultimate liquidity sponge, right? And because global assets are priced in dollars, a surging dollar exerts a powerful gravity like pull across every major asset class, draining liquidity from risk markets and commodities into safety of the greenback. So when you go back and you look at your indices, your precious metals, and you start to look at those, the first thing we're going to look at is ES and NQ. But when you start to look at those, you're going to have a better understanding as to what is happening and what is going on. So in equities, indices like ES and NQ futures, the current state, major indices have put in an incredible, powerful multi-month. We're going to go back to this. An incredible multi-month run led heavily by AI infrastructure trade. However, the DXY pushed past 101. The market began testing overhead resistance. Now, the DXY effect on an intraday basis, index futures share a sharp inverse relationship with the dollar. And this is why I said it's important to know what is sharing inverse relationships, and we're going to pay attention to those because it can affect our trading. This what gives you an edge in the market. Understanding these things give you an edge in the market. That's why we have an edge when we go and trade. We have an idea and an understanding of what we're looking for exactly. So the DXY effect on an intraday basis, index futures share a sharp inverse relationship with the dollar. When the DXY actively drives toward daily liquidity pools, it acts as a ceiling for ES and NQ. Here's our play, the new level play. We do not chase breakouts on indices when the DXY is resting at discount support zones. We wait for the DXY to run buy side liquidity and show signs of structural rejection before executing long setups on futures. So today, why do you think we were looking? If we go back, look, what happened when you take a look at the dollar? You could see where we got rejected here and started pulling back, right? Right at 101.4. We got rejected there at that same high of what we had back in May of 2025. So us getting rejected there back at that high, if you were to go back and you start paying attention to ES, right? We could go to ES and we could look at what we did within the market this morning. Here we're going to just go to a 4-hour chart to be able to see that. Once price got rejected there, what has happened? It pulled back. ES pulled back right here. Same thing for NQ. At the rejection, what happened? It pulled back. So initially, once that pullback happened, that was no reason for us to be able to target and just go long. And you could find better setups and looking for shorts. The only thing of that the market did today was just go back to relative equal highs. Let's go to MES. You'll be able to see it. We drop down to a lower time frame. Let's go to like the 5 minute. And I want to take off these execution marks so it'll be a lot better for you to be able to see. Want to clear it up. What did we say our initial bias was? That price was probably going to come here to relative equal highs this morning on longs, sweep these equal highs, and then those shorts were going to come in. That was initially our plan. So our trading plan this morning looked something that was just like this. It would have been a sweep of relative equal highs and come back and we get the distribution move back here. That was the necessary move of what we wanted. So the manipulation that came within that was the market saying, hey, we'll manipulate up, but we're not going to take out these equal highs. We're going to go ahead and give you distribution to get a draw on more liquidity. And then we're coming back to these relative equal highs here on this side. And so having at least an understanding of what our initial bias was in the beginning based upon what the dollar gave, it helped us in the market this morning. Once we were able to take our initial trade and we made the money it was that we made this morning, it was because of that reason. And that's what gives you an edge. It's all about giving yourself an edge in the market. Most traders are not going to have this conversation with you on that. And some of them just don't even know that. They just go in and just start trading. But me, I like to be a little bit more advanced within my trading and have an understanding of the full market in its entirety. So the reason why we didn't chase any breakouts on indices as it pertains to going long was because of those things there. Those reasons. And I'm able to explain it in thorough detail without having to put all the mumbo jumbo and all of the other stuff that's on the chart. No reason for it. No reason for it. So if we go back and we start paying attention to what? Our precious metals. So when we go and look at our precious metals, right here on silver and gold, it's a tight inverse relationship. Diminished non-yielding bullion appeal, gold testing the floor at 39.80 and 40.20. It's testing that floor. So with gold, what was once support has become what? Resistance. Our new level play as it pertains to precious metals is wait for the dollar to be exhausted from the move it is of what it just made. It's still not exhausted as of yet. So now when we go and we start looking at from a macro standpoint, we start looking at our precious metals and we go to gold. Let's go to gold and we look at it from a daily chart. Now you're looking at it from a daily chart. What is it doing? Retests that area of what was once support. It has now become resistance. Here's a better idea to be able, so you could be able to see that. Look at how far this trend line goes of support. It comes all the way back here. We're in a year of 2023 back here. Support 2024. Comes back to support right here, December of 2024. It continues to trail upward, right? Hit a high, 5,626. And then it pulled all the way back to where? Support. Now, what was once support has now become resistance because what is happening? The dollar is now emerging as king. And so, if you were to lose support here, in which it is showing, you have sell side liquidity sitting at 32.93 of where gold could be headed. Same thing for silver. You could look at silver. We have support draw all the way back to here of April of 2025, August 2025, support. It trades all the way up and creates a high of 121,765. And it comes all the way back down and breaks this support of what was strong for the past couple of years, right? And it has now become a resistance area. And it is trading lower with sell side liquidity sitting at $45 on silver. So if you're a person who's saying, hey man, I want to buy some silver, I want to get involved and buy me some precious metals, I want to be able to catch that next trend, this is the stuff that you pay attention to. This is how you find those key entry points for gold and for silver. Cross assets breakdown. Equity indices, ES and futures. We know that major indices tested at DXY pushes past 101. That is an inverse relationship, right? We talked about that. Individual equities, our stocks, mega cap tech, AI, real estate, utilities, concentrated performance, high rates, value pressure. The play on any of your mega cap techs, prioritize cash flow, rich mega caps. Well, Jeremy, what do you mean by that? Can you break that down just a little bit more? What I mean by that is performance remains highly concentrated at the top. That means all your top Max 7s, all your best, anything from NVIDIA, from Micron to AMD, any of those, right? It's highly concentrated up there at the top. And that tech and AI infrastructure, the heavyweights, they continue to demonstrate a margin expansion and strong corporate earnings throughout this process, which means that, hey, if you didn't catch the trend on those trades, you're going to have, you're just going to have to be sitting on the sideline and be waiting for an opportunity to be able to get yourself involved in that. And you got to find other moves within different sectors that plays off of those moves. So you need to prioritize, right? Cash flow and rich mega caps. You want to pay attention to those. You want to pay attention to earnings. You want to see which companies are being profitable from this standpoint based upon earnings. So therefore, you'll know, okay, continuously throughout this, I can be able to start sliding some money here and making investments towards these things because they're going to continue to climb. They're not going to decline. You want to find things that track institutional buying signals and long-term leap options on strong fundamental names to outride the macro volatility. That means now is the time to be looking for your leap options. It's about that time. Jeremy, what do you mean? Like what's an opportunity for a different leap option that I could be paying attention to? Well, let's just look up some, right? If you're a person who likes a company, right, that we'll be able to use, let's see if we can find a company like Apple. If you're a person who is saying, "Oh, well, I like Apple," what do you have to understand and know about Apple? It's a mega tech. It's big. It's a mega tech on Apple. So with Apple, this might be a company where you might want to hold off just a little bit on Apple because it still has what? Volatile pressure, downward pressure still coming. So I wouldn't necessarily want to take a leap on that. But if I'm a person who's looking at something like Lululemon, look at the beatdown of what a company like Lulu has been catching throughout this year. From its high, Lulu has been getting whooped by 75%. So if you're a person who likes Lululemon and this traded extremely into a deeper discount, meaning that it went into a full bear market on Lululemon, this may be a company you may want to take a look at when it comes to a leap option. Here's another one. Netflix. Netflix, same exact way. You catch a high of 134.12, pulls all the way back to $74.27. Deep discount, leap option opportunity with Netflix. Massive. Here's another company, Sprouts. This was one where I felt as though I ain't gonna lie, y'all. I got burned on Sprouts going long, and this was back in like 2025 or sometime back. Me going long on Sprouts and got killed on Sprouts going long. But now look at Sprouts. Sprouts is an opportunity where you can take a leap option for it to reclaim that high at 182 and make a lot of money. These are the things that we have to be starting to pay attention to. Things like Intel, they already done took off within the trade. Here's another good company, which is one of my favorites. Obviously, we keep getting rejected here at $7.53, right? Relative equal highs that is sitting there. Uh a little bit of sell pressure that is sitting right there. But there's enough momentum on this to take a leap option, right? And just hold and make great money on this. Great money. So those are your examples when I talk about tracking institutional buying signals for long-term leap options. Lululemon, institutional buying is happening there. What's another company? What's the other company that we gave where institutional buying is happening? You could have got institutional buying also with Webull, but Webull is still in a place of where institutions are grabbing it because it's still fairly cheap, sitting at around $6 and some change. So that is what you're looking for when it comes to long-term plays. Those long-term plays are what you find. Those leap option plays are what you find is going to make you the money over time in your long-term trades. But your day trades are completely different. your day trades, you're going to be focused more on what is actually happening with the dollar itself, and is it affecting the indices currently, just like oil. What happened with oil? As the dollar surged, what happened? Oil started to do what? Decline. Because at one point, oil was coupled to what? Look at oil. Look at the support. Oil been holding support since December of 2025. Support, support, and you lose support here. Support there, support there, and look here at this area. What was once support has become resistance, and you lose support there because the dollar is what? Surging. So, the bottom line in all of this, and we go back to the dollar itself to have our eyes on it. The bottom line in all of this is when the DXY moves, the entire world moves with it. As traders trying to fight a strong dollar trend across cryptos, metals, that is a low probability game. That means that people who are trying to go long in crypto, you're tripping. Straight up, you're tripping. Jeremy, what do you mean by that? Just take a look at crypto. Take a look at Bitcoin. What has been happening with Bitcoin? It's nothing but bear flat. It's full of bear flat patterns, and it's deeply within a discount zone, and it's going to continue to go a little bit lower. But it's not the time to start buying. I wouldn't be buying here yet, and that's the same thing for all your crypto. Cardano, Algorand, Atom, Doge, Polkadot. Look at Ethereum, even Ethereum itself. None of these are ready for you to start buying as of yet because there's still downward pressure for them. Now, for most people, hey, it may look good to you to start buying right here, but for me, I don't want to start buying until I know that the dollar is exhausted. And once I know that the dollar is exhausted, then I'll pull the trigger. What did we say about cryptocurrency? Bitcoin and Ethereum, right? Which makes up 60% of the entire crypto market cap. So when we taking a look at this, high beta liquidity asset liquidation cascades triggered by dollar contraction. Watch key regions and treat sweeps as accumulation on pools. So the more this starts sweeping lower, that's where I want to be accumulating my crypto. So Jeremy, what is the bottom line? The bottom line is you want to map these on higher time frame dollar arrays and let retail stops get swept first and trade with clarity. That means that what, Jeremy? If I'm a person who is looking at something that's like Bitcoin and I see how this chart better of Bitcoin. If we're sweeping here at these discounted zones and we're sweeping lower, this is where I want to have my accumulation phase start. I need to see a sweep and draw on liquidity around here, around 52,469. If I could catch 52,469, that's a buy for me. That is a buy for me. So me buying in this zone here for crypto is a great thing to do. It's not a bad thing. You just have to make sure that you're in a place of where you could withstand certain volatility, but understand and know as the dollar is exhausting itself, that's where you want to start accumulating and start getting ready and prepared for a new phase within crypto. And so when you overall assess the market like that, I mean, it only makes sense, right? It only makes sense. Bitcoin has experienced, a sharp liquidation phase, re- retreating towards the $58,000, $59,000 range. Its leverage proxy plays and corporate Bitcoin balance sheets have felt intense technical distress. This is why you have people like Michael Saylor selling Bitcoin. Crypto behaves as a pure high beta liquidity asset. When the dollar strengthens, it signifies a contraction in global dollar liquidity. Capital aggressively flees speculative assets, risk assets first, triggering textbook cascade liquidations down into major discount PD arrays. So, what did I say? As the dollar rises and the more the dollar continues to climb, you're going to get more downward pressure on crypto. You're going to get more downward pressure on crypto. Reclaiming the $60,000, $61,000 region is the key repair gate for Bitcoin bulls. Treat current sweeps of 58,000 liquidity pools as accumulation zones only if the dollar shows signs of topping out at its premium targets. But it hasn't topped out at its premium targets yet. Has it? Let's go up one. We're on a weekly. Are we in a premium? Absolutely not. Not even on a weekly, we're not in a premium as of yet. Our premium comes up here. You can even use this level here first. Premiums. We're not in a premium as of yet. Go to the dollar. We're not in premium as of yet. So that means we still have room to climb, room to grow with the dollar before we start getting into any risky assets, speculative assets, okay? So, I hope this was really good for you. I hope it was able to give you some clarity. I hope it was something that helped you navigate through the market itself in its entirety, because this is what you need to do in order to be able to be successful at trading. This is what gives you that edge in the market. So, for those of you who want part within the newsletter, because I know there's some of you that do, this is what I'm gonna do. I'm going to take this here. Give me 1 second. I'm gonna drop it in the chat for you. When I drop this in the chat for you, I want you to go ahead and sign up. I don't even want you to waste any time. I encourage you to go ahead and sign up. And you say, you know what, Jeremy? I'm not even going to waste no time. I am going to go ahead and sign up because I need to be able to know what to do when it's time to do it. And the only way that I know what to do when it's time to do it is if I had an edge in the market, and I need something to give me an edge. So here we go. I dropped it in the chat for you. I'm going to go ahead and pin that. And now you have access to the newsletter. For those of you who want access to the newsletter, you have access to that. And this is going to help you out tremendously. I promise you it will. For those who need it, for those of you who don't need it, hey, good luck to you. I hope you do great and continue to do great within the markets as a trader. And that's all we could wish for. It's for the best for everybody. But I like for my people to have an edge in the market, have an understanding of where you're going in the market. When you don't have no understanding or no idea as what is happening in the market, how can you say you know about the market? And that's just my opinion. If somebody's giving me something that has an edge, that I can have an edge in the market with, I am taking me personally, I'm taking full advantage. That's why I love uh Michael from ICT, because he teaches you how to have an edge in the market. Look for an edge within the market. He teaches that. And once you have that, it's so much better when you're trading. It's so much better when you're trading. So I appreciate you all, man. This has been another banger. We went over our trade this morning. I gave you better clarity and understanding. Not only did you have better clarity and understanding on that, but we also went into our weekly overall bias of the macro market itself to give us key full advantage. I appreciate y'all.